Hello traders, Gary Wagner here, just about 11:15 in Honolulu, 4:15 in New York. It is Tuesday, December 20th, 2016, and this is the Daily Report for Gold and Silver. With U.S. equities continuing to roar to the upside and a moderately strong U.S. dollar, we continue to see downside pressure in the precious metals markets. We do have a mixed bag today, but gold is certainly taking it on the chin, currently trading off about $9 at 1133.50. That's a net change of about 0.8%. Low on the day today has been 1127 and a high of 1141. Of course, we have been on record as being not only extremely bearish, but we did recommend over the last couple of weeks that traders that wish to have positions active as we go into the holiday seasons need to position themselves on the short side, which they have. Recommendation is obviously to continue those short plays. Now, silver, on the other hand, has shown a little bit of resilience, and as you can see, is trading up about 2-3 cents on the day at 16.11. The low on the day, 1567. So we've seen some pretty dramatic downside pressure and a recovery. The high 1614. So as you can see, we're only about 2-3 cents off of the intraday high. Now the dollar, of course, is having an influence, but it is only a very, very nominal influence today. Dollar is well above 103 at 103.29. We are at a point in terms of dollar strength that we haven't seen since 2002. And we believe that those trends should continue as we go into the end of the year. So traders, as we get closer and closer to our target, in which we believe there is a real decent probability of gold pricing finding technical support, we still see this market under substantial pressure. Now, I want to revisit a topic that we started to talk about yesterday, which is that given the fact that we have seen a tremendous decline in the value of gold, considering that the market hit a intra-year high of roughly 1380, and it's sitting over 200 points lower at 1133, and also considering that since the presidential election, which is this long red bar right here, we have seen the market decline dramatically. Many investors and traders have an absolute right to have given up on gold as a safe haven investment. Now, my sense is that what we have witnessed this year is still unique and something different than what we have seen over the last couple of years. We talked about this over the last couple of weeks, and primarily we really honed in on it yesterday, and that is the fact that for the first time since this market began its decline back in 2011, which saw the market go from 19,000 down to this low here at 1050, we can clearly see that this year has the characteristics of having a higher high and a higher low than the previous year. That is the first time we've witnessed it. It was not available to us in 2015, nor was it visible in 2014, 2013, or 2012. This is a unique situation in terms of recent activity in the market, and that tells me that we are looking at a different market than we have been. In other words, I believe that we are currently in a corrective wave that should really find support anywhere between, call it 1120 and 1110, as low as maybe $1,100 per ounce. We're now at 1133, so we're very, very close to seeing the market hit that point and then getting the technical confirmation as to whether or not we'll see a bounce and an upside move in the market, or will continue to fall further. Because if we do fall further, in other words, if we do break below this price point and this critical support level right now that I have earmarked between 75 and 78%, then any hope of us looking at recent activity within the confines of a bullish model are really taken out, because we're witnessing a market that is selling off, and we can in no way model this current sell-off, what we're labeling as a B wave, There's no way we can model it as a corrective wave to the upside move we witnessed at the beginning of the year when the market moved from 1050 up to 1380. However, if we do see the market continue to soften and more importantly find some sort of support and bounce off of this price point, which as I've said, I do not really expect that this year, but would look for that possible occurrence next year once President-elect Trump becomes president and we see how he is able to put these policies into practice or pen to paper, so to speak. That would be a fundamental piece of data that could move the needle as far as gold pricing goes. For right now, my recommendation is to either be sidelined as we officially are on record or to maintain your short position, as I have suggested, for those traders that want to have active positions going into the holidays as well as the new year. Maintain those short positions. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another update and review. Bye-bye.